I'll show you the most complete and proven guide on how to trade the order block. What's up, moneymaker? My name is Alex. This is the third episode of Smart Money Trading course. In just one video we will cover everything you need about order blocks. I will explain you the mechanics behind this tool in easy way. You will know what factors you should focus on to spot the right one. Also, we're gonna check examples of fake order blocks and fact check some nonsense you might hear in other YouTube videos to avoid losing the money. Finally, how to trade it like a giga chat on real chart examples. So, what's an order block? An order block is a formation of two candlesticks before the price reversal. It is created during the big players' manipulation. This area serves the purpose to fill position there or return the price to additionally fulfill the orders. The order block is a crucial element of your analysis because you can catch up on the price reversal in this area, or at least to see some reaction of it. Just take a look at the most common example of an order block. The first candle grabs the liquidity and the second candle immediately engulfs it in the opposite direction. So, what factors can tell me the order block is legit? You can consider the order block is confirmed when the second candle overlaps the first candle body. The range of the order block is the entire first candle with wicks on both sides. But if the second candle has a longer wick, we expand the range of the order block to its borders. Remember, the liquidity rate is the primary condition for shaping an order block. The next condition is when the second candle absorbs the first candle body. So what do big players trying to hide from us behind all of these moves? In the first episode you learned that the price moves from one liquidity pool to another. Make sure you study it thoroughly so you understand how the market works. Link is in the description, and don't forget to subscribe to my channel and turn on notifications so you never miss new episodes. As I mentioned before, the price moves from one liquidity pool to another. The smart capital accumulates its position by raiding stop losses and orders of those who trade breakouts. After they raided the level, any significant high or low, and accumulated enough volume, they just reverse the price towards the true direction. That's why we see a tiny level breakout that aims to trigger retail stop losses and then sharp expansion towards the opposite direction. That is how the order block is shaped. But there is a problem. As I mentioned before, to deceive retail traders, they need to push the price in false direction, so their previously opened orders became unprofitable after the price was reversed. So how do they cover the cost of this trick? That's simple, they just return the price to the range of the order block to minimize losses. That's why sooner or later the price will return to test order block. So what do you should memorize and practice? The primary one, the order block, is created during the liquidity rate. Also consider additional factors to find reliable order blocks, such as the order block tests the support or resistance zones, usually it's significant highs or lows. The second engulfing candle creates a fair value gap. After the order block formation, there is a break of structure. Also, I have an assignment for you, moneymaker. You have to open 1 hour chart. You can choose any altcoin you like, find at least 10 situations matching the rules I mentioned before, and share your experience in the comment section below. A few words about fake order blocks. Many videos on YouTube and various trading courses spread false information. They say the order block is the last opposite candle before the expansion. It's complete nonsense, there is no logic in it. Just remember, no liquidity rate, it's not an order block. The liquidity rate is our primary condition to consider that is an order block. Ignoring these factors will not make you profitable on the distance. But have you ever heard about hidden order blocks? I'd like to highlight an important topic, because in many paid courses it's not even mentioned. Usually traders look for order blocks on standard time frames such as daily, 4 hour, 1 hour and so on. But the trick is that many order blocks do not have a textbook appearance on standard time frames and may be represented not with just 2 candles but with more, or it may be just a wick. So in this case we will have to switch between custom time frames to find an order block we all used to see. But I will show you how to spot them on the standard time frames, so after few hours of practice you will be able to do it easily. So let's jump straight to the Bitcoin chart. Let's focus on this area. And I have a question to you: how many order blocks do you see where the price had a reaction? If you are seeking a textbook 2 candlestick order blocks, these are 7 pieces you can identify easily. But these 4 candles are order blocks as well, even though they don't look like the textbook examples I have shown. Let's analyze them precisely and recall the rules we learned today. The first one is the liquidity grab and the second one is the engulfing. These 2 order blocks shown to us as a candle wicks. Long story short, the 2 basic rules I mentioned before were met. We see the liquidity rate by the wicks of these candles, and the engulfing you can find on the lower time frame, as well as you can find textbook appearance of this order block. Because of the daily time frame, the low of each previous candlestick can be considered a significant liquidity pool. Let's jump to AVAX chart for our time frame. The order block was shaped like a candle wick in the premium zone. It grabs the liquidity from the previous high. This candle wick acts as a resistance zone. We enter a trade from the beginning of the order block with a stop behind it. The target is to hit an imbalance in the discount zone and take the low. The risk and reward ratio is more than 1:4. The next example is on Polkadot's chart. We have 4-hour time frame. The order block was created when the imbalance was completely filled. This is an excellent combination of factors that drastically increases the probability of successful trade. Our target is to take these lows. The stop is set above the order block. We target the previously marked lows. The risk and reward ratio is 1:7. The next one is a fill coin. We have a daily chart. This candle is an order block that traded liquidity from these significant lows. This candle acts as a support zone and we want to enter the trade from it. Let's switch to the 4-hour time frame. Here we see a new order block forming in the support zone. We enter trade from its beginning, stop loss is set behind it. At these equal highs we can take 50% of the position. The risk and reward ratio is more than 1:3, which is pretty good. The remaining 50% can be taken inside the order block where the retracement started. The stop I move to break even. The risk and reward ratio is more than 1:6. And now a few words about entry rules. I recommend you to open a trade at the beginning of the first candle or at 50% level of the order block area. The 50% level is measured from the candle's opening to its wick high, as you can see it on the screen. If an imbalance was created inside this order block on lower time frames, you can enter a trade out of this imbalance. This imbalance will be additional confirmation. The stop loss is usually set behind or above the order block. The take profit is usually set on the first high or low where the retracement started. Also, you can target an imbalance or set it on significant liquidity pool. Just don't forget about correct risk to reward ratio. I recommend at least 1:3. Keep in mind, an order block is a confirmational tool. It works the best paired with an imbalance. Entries against the trend will decrease your chances to win. If you wanna trade just a random order block you find on the chart, it won't play out like you wish. Take into account the environment an order block is surrounded by and remember the rules we learned today. Also, an order block can turn into mitigation block or a breaker block. These two elements can act as a good support or resistance zones. If you have a specific topic you want me to highlight, just write it in the comment section. Subscribe to my channel, turn on notification, smash the like button. Good luck to everyone and trade wisely.